Hi, welcome to the space. Um, gonna wait for people to join in. Um, so yeah, GameStop is more or less worthless. I don't know why there's so much obsession with this stock. Same thing kind of happened to AMC. AMC has dropped 90 something percent, leaving a lot of people poorer, much poorer for the wear. I think what happened with AMC is there was a basic misunderstanding of investing fundamentals. Those fundamentals included the toxic debt situation the company was in, and that resulted, not understanding those fundamentals resulted in a lot of people losing a lot of money. Same thing is happening with GameStop. GameStop's more or less a worthless company, but there's some extraneous factors, which I strongly recommend ignoring, that are leading to people paying attention to this company. Company is not interesting, has not been interesting in 20 years. Um, Retail stores in general have suffered. The best retailers have been able to maybe keep their stock price flat. If you can name some retailers that have grown over the last 10 years, I'd be curious. But GameStop is a company that doesn't need to exist. Digital distribution of games is taking over. The collectibles market they serve is small and not that interesting. And you know that the company has made strategic missteps. They bet a lot on NFTs, and they did that just as the NFT market imploded, which suggests to me that there's no real brains at the company. But more importantly, look, it doesn't matter what market participants think of the stock. There's a market participant here that's popular. This is a guy that has traded the stock before and posted on a message board. These things have been around for 25 years. There are people who are a lot richer, who are a lot more impressive traders, and nobody cares when they buy or sell a stock. So why should they care now? This is just lemmings following each other into the sea. So happy to take some questions. Kaki, what do you want to talk about?
Yeah, man. Thank you so much, Farmer Bro, for inviting me up here. Now, I understand the whole dynamic of, a company P&L. There's a certain value that a company can trade at. But, like, at the same time, like, I understand the message that is trying to be sent with that statement. But, a lot of people who buy these aren't buying it because of that reason. It's basically for entertainment purposes. And so my question is like, I mean, do you feel like they should be allowed to set prices just because they think it should be that price based on P&L? I mean, why not? If it goes to $1,000 based on supply and demand, that's how the market should work. Not because they say it's
Of
because.
course. Yeah. No, the market is a supply and demand machine.
Yeah. So I mean, with a lot of these, I mean, do you suspect that anyone or they try to set prices based on valuations?
I think that when you have a lot of money and you're trying to invest in stocks, you try to buy stocks, you try to get your bang for the buck, right? Um, if you try to sell me a lemonade stand for $1 billion, I'm going to say no. But if you try to sell me Microsoft for $1 billion, that's a great bargain. So investors look for bargains, and GameStop's not a bargain. The company doesn't make any money, so why would I be interested in buying the stock when I take my hard-earned money and buy a real company?
Well, yeah, I mean, not you. What I'm saying is, if people want to buy it, they can buy it. If they feel like they want to pay $30, they can pay $30.
Sure, I think
But
they'll
it's
lose
up to
money with
them
it.
to do it. It's not up to
Yeah, I mean,
whoever's
people lose money all the time. People bought expensive stocks in the past, like AMC, and they got slaughtered. I mean, it's up to people to decide what to do with their portfolio. Sure.
But is that actually selling of the stock, or is that market makers and whatnot setting the price based on the
How much?
valuation that they
How
think
much?
it
How
is?
much time have you spent in finance? Have you ever worked in finance?
No.
Okay. Yeah. So market makers have zero impact on the stock's price. Market makers barely exist anymore.
Okay, so who has that impact now?
Traders, traders buy and sell the stock.
Really? Is that really what's going on?
Really? I mean, what, do you think there's some mystery Illuminati that sets the price for stocks?
I do, yeah, because I watched some
I think you're a
interview.
retard.
Well, let me tell
How
you
old are you,
why I
kid?
think that. Let me
Kid,
tell you
kid,
why I
kid.
think that.
All right, I don't want to. I want to hear that. How
Really?
old are you? Yeah, how old are you?
20s.
Okay, you're in your 20s. What's your occupation?
Well, I'm not going to say specifically, but I do tech stuff for just a
Okay,
corporation.
okay. Listen, man, I've been in finance 25 years. I've done a lot of things. I've shorted a lot of stocks. I've bought a lot of stocks. I've been a publicly traded CEO. There's no Illuminati. I hate to break it to you. Santa Claus isn't real. Uh, it's just doesn't exist. Stocks go up and down based on what the stockholders do, and that's it. The market works as intended.
So, okay, so you think that it's transparent, it works based
Do
on
I
supply
think
and
I
demand.
know? I operated hedge funds. I worked for billion-dollar hedge funds. I was a publicly traded CEO. I've taken companies public. I've shorted companies into the ground. I've done illegal shit. I know. Yes, I know. I don't. I don't think. I know for sure.
Okay, so all of these people who say otherwise, they're just completely wrong.
Yes. Yes. You don't know anything about finance.
I
Who are you
don't.
listening
That's why I'm
to?
asking questions.
Yeah. You're right. Yeah, I'm telling you the answer. You know, it's pretty simple. It's a pretty simple explanation. GameStop's overvalued right now. The market will bring its price down over time, but assuming what I think is going to happen is going to happen. Of course, it's possible that management pulls a rabbit out of the hat and creates some great new product growth area, but it's unlikely. And you're much better off buying a company that actually has already established that, like a Palantir or something like that. Um, GameStop's revenue is going down. Palantir's revenue is going up. It's pretty. Sometimes this isn't that hard. People care about GameStop because it's got some social media buzz. But have you looked at 5,000 different stocks and you've decided GameStop's the one for you? That's what you have to do in investing. You can't sit there and say, "Oh, my friend told me that this is a good stock." You have to scrutinize every. Have you scrutinized every stock in the space that's equivalent to GameStop, retailers in this case, and you've determined that the most undervalued one is GameStop? Of course not. You're hoping and praying that GameStop's going to go up because of some weird short squeeze or some other, I hope that I can play musical chairs and force the stock price to go up. But the problem with that thesis is that people are rational. If the price goes up, the incremental seller comes out, right? The person says, "Oh, gee whiz, I got to pay my bills. I'm up $500 on this. I might as well sell and move on." And the propensity to sell increases with the price going up. The propensity to buy, theoretically, increases with the price going down. Uh, People will not diamond hand. We learned that the last time, right? Last time the stock went down 90%, we learned people will not diamond hand. Same thing with AMC. Nobody diamond handed. It went to zero. Everyone lost all their money. You know, I think it was called
But
Ape
let me ask
Strong.
you this. It seemed with AMC that it was such an orderly descent
Yeah,
to the bottom. So if your theory is that people will sell, at a price when it's high, you would expect it to go down
there's no
fast.
there's no net sellers or net buyers, right? Everything is a trade. The trade price is the last price, and the marginal impact, the marginal demand and supply at those prices get set by traders, right? It's not like you selling makes the stock go down. You selling is supply that a buyer may say, you know what, I don't want to keep buying because I see the supply here. So in any event, I'm gonna circle around. Thanks for participating. Let's talk to somebody else. Hello. Getbusy.eth. How are you? Get busy. I'd like you to get busy. You're not very busy. All right, we'll move on to somebody else. All right, my friend is here, Lady Trader, and AI Council. Why don't some of you guys chit chat here?
Hey, my mic's on. Are you calling me Martin?
I said, yeah, go ahead. What's on your
Yeah,
mind?
Cyrus, AI Council. I'm just wondering your opinion on what happened today with Berkshire Hathaway and the others. What was that all about? Will that happen again? What were the causes?
I mean,
Has it happened
software.
before? Go ahead. Sorry.
It has happened before. Software is inherently unpredictable. Um, you know, there's some software is better than other software, uh, and there's an error in the software. I know my some of my team members looked into it a lot more closely, but usually when there's sometimes called a fat finger trade, those trades get canceled. There's no lucky guy that gets to buy all the stock at a low price. They complain to the exchange. The exchange reviews the trades. They actually have, I think, a little framework for canceling those trades. And that's really it. It wasn't too exciting.
Right on. Thank you.
Sure. All right. Get busy. Did you want to say something? I'm going to get busier. Okay.
What's up, Martin?
What's up?
Hey, are you making any trades in this environment with GME?
So I'm an entrepreneur. I don't really trade actively. I think it's a short. Maybe I'll short some tomorrow. I don't know. But my job is to create value by growing my businesses. That's what I've done most of my career and fairly successfully. And, just going to continue to do that. The stock market is sometimes interesting, but, GameStop looks overvalued. Last time I did calls like this, I think, I see my friend Amy here. Amy knows last time we did these types of calls, it was because AMC was hot. We spent hours and hours and hours patiently trying to explain to people why AMC was overvalued. Hopefully saved some people some money, but AMC stock, just dropped and dropped and dropped. GameStop um, doesn't have the same toxic debt problem that AMC had that led its price to go from, let's see, split adjusted around $200 to it's now four or $5, down quite a lot, 98% from the peak. I like stocks that make new highs, not make new lows. Um, GameStop is sort of has some. It's in the news because somebody bought the stock. I don't think that that's a rational kind of perspective. Um, there's in fact, as you guys may know, just a couple weeks ago, GameStop hit almost $50, so it's about half that price. So a lot of people are holding the bag for that, and I think they'll hold the bag again. Now, it doesn't mean you can't trade. There are smart traders out there that they can guess the rhythms of the market. That's probably not you listening right now. Most people are not good traders. I'd say 1% of people are really great traders. They could do that for a living. Some of those people can outfox the rest of us. I'm not one of those people either. There's a lot of smart traders out there, but most people are not smart traders, and they'll lose their shirt trying to beat smart traders. Some of those smart traders, by the way, are computers. They're really hard to beat. Um, Computers that people have spent more than $1 billion developing. So I think that GameStop is just one of these stocks that's up quite a lot from its kind of pre-manipulated, if you will, or pre-promoted price, and it'll return to it. It's probably going to go down around 50% from here. I don't think the guy who's buying it really has anything to do with anything. There's a lot of people out there on Wall Street that are worth many billions of dollars that have made much more impressive trades. Nobody cares when they buy a stock or sell a stock. Stock might move a little bit. I remember shorting a stock, company created by a multi-billionaire named Al Mann, and a lot of people on Wall Street were mad at me because Al Mann was a billionaire and Martin Shkreli wasn't. And Al Mann was going to create inhaled insulin, and inhaled insulin was a bad idea. And the inhaled insulin product was never a hit, and Mr. Mann passed away. He was a good person, I believe. He's a great entrepreneur, but his last act didn't work. His last act, he basically lost his whole fortune in his last act. There's a guy named Phil Frost who was also a brilliant entrepreneur. He created one of the biggest generic companies ever in pharmaceuticals, and his last act is still going on, and it's basically also consumed his fortune. There's a lot of people out there that make a lot of money and then they lose a lot of money, and there's some people that have a process that's robust that lasts forever. It's hard to know who's who. You only really know at the end, do you? After enough trades, after enough investments, after enough years, maybe you can tell. In statistics, there's something called p-value, where you can, using a sample size and different parameters, you can actually test whether or not a result is statistically significant. I can tell you that a couple of trades in a stock is not statistically significant. We don't know whether this person is the next Warren Buffett or not. And I would bet not, given my assessment of GameStop and its prospects. It basically is a company with no real assets. They haven't made a dime in cash flow in 2 years. That's not great. If you buy a stock, you're buying a share of a company. And when you buy a share of a company, you're hoping that that company is going to produce something for you, namely income, profits. Imagine if you were able to buy a $10 billion company in the private markets, like a private equity company might. That company might make you 800 million. And after 10 years or 12 years, you could have the entire company for free. You could even borrow some of that. That's called a leveraged buyout. And you can make many, many billions of dollars by doing that. With GameStop, over the last 2 years, the company hasn't made a dime. That's a problem. I'd much rather take my money and buy a share of that company I just described. That's basically what your average private equity company does. They're able to buy companies that are fairly boring for 8 times, 10 times, 12 times earnings. And GameStop's last 3 years of cash flow from operations, let me read this out to you. Last year was negative 204 million. The year before that was positive 108. So over 2 years, this company lost net, $100 million. How about the year before that? Was that better? No. They lost $434 million that year. So over the last 3 years, the company's lost $500 million. Now, that doesn't tell us about what's going to happen going forward, right? It's possible that going forward, the company's going to make a lot of money. But it's hard to do.
Martin, don't leave out that they just completed a 45 million share offering, last week?
Yeah.
I think book value is like $5 a change, $6 a change, something like that.
Yeah, so the downside is limited to $5. But the upside is very limited, given the company is engaged in the retail business. The retail business is not a great business right now. It hasn't been a great business in 20 years. If you look at the stocks of most retailers, the ones that haven't gone bankrupt, it's been a rough ride because stores are kind of antiquated concepts. Anyway, does anybody have a question? Let me move on to another speaker. Go ahead, Dom.
Hey, Martin, what's going on, man? Thanks for having me up. Good to see you again.
Sure.
So, question I got for you is, I think we heard, what was it, last week or the week before, that Biden's administration had vetoed a bill for current for custodianship, and I was wondering what your opinion is on that.
Is this about? We're here to talk about GameStop, so I just want to.
Oh, all right. I don't know if you just don't mind touching on that for a second, like just the over.
I do, because we're here to talk about GameStop. But thanks for coming.
I think GameStop actually went to hit like 80 on the first go around with the mix.
Yeah, I feel bad for anybody that bought at that price. Sakuzi, what do you have to say?
Oh, sorry, I didn't know the format in here. I just hopped in. Yeah, what's the vibes with GME that you guys are discussing?
Okay, well, thanks for coming, Sakuzi. Gradient descent, my favorite. What do you have to say? Oh, lady, you can always speak. You know that.
Thanks so much. So for GME, looking at the chart, like there are obviously, traders that are day trading, all of that. But then there are fundamentals too. Why do you think people are not looking at those fundamentals? Like what you posted on your page, that makes sense, right? Like those numbers, no one is looking at. No one is looking at the earning reports. No one is paying attention to all of the dilution that's happening when they are, when they keep pushing out more shares, right? AMC or GME, all of that. Like, what happens? Like, why do people not look at that?
I think that a lot of people basically, especially in good times, good market times, they're willing to sort of gamble instead of invest or trade. And we see this a lot right now. There are meme coins, as you know very well, maybe more than almost everyone, that don't have fundamentals. They don't even have a company, right? They're just a picture or something like that. And this is basically gambling, right? It's fun to gamble. That's why Atlantic City and more importantly Vegas and Macau are popular. Gambling's great if you have money coming in and if you have money to burn. Usually, these kinds of musical chairs games stop when there's depression or recession. I'm no economist. I have no clue whether there's going to be a depression or recession, when and if, etc. We've had a pretty good track record for a little while here. No recessions in a long time, since 2008, really. But usually, if unemployment goes up or things like that, the propensity, right, that marginal buyer shrivels up because you know what, I'm having trouble making ends meet. I don't really care about GameStop. In fact, I might use it as a source of funds if the unemployment goes up and I need to liquidate some of my fun gambling money and start thinking about, how do I pay for this surgery? How do I pay for this prescription drug that somebody just jacked the price up of? How do I pay for these clothes? How do I send my kid to school? Those are the things you worry about in a recession because your income may be dropped due to unemployment or due to something else. So, then use the source of funds. But in good times where money's plentiful and you have excess money, you can throw them into a Caitlyn Jenner token or a Dog with Hat token or a GameStop because you want to stick it to the man and you think buying this stock is going to do something other than make the guy buying it maybe rich. You you're willing to do that because you don't really care. You're happy to lose the money. It doesn't make a difference to you. You get your paycheck next week, and what difference does it make? But those of us who are trying to make good returns in the stock market, I think over the long run, we try to find the strategy is to try to find companies that are going to grow at a reasonable rate, and you're paying a reasonable price, and management's very good. And it doesn't seem to me that GameStop fits any of those criteria. Nevertheless, people like to gamble, and if something's going up, maybe it's going to keep going up. And then if they get hosed gambling, there's always somebody else who will replace them the next day. There's a sucker born every minute, according to the old saying. And there's hundreds, if not thousands, of times in history where this has happened. I mean, I'm now getting to be middle aged. I'm 41, but I've seen this since I was working on Wall Street when I was 16. 25 years. It never ends. There's always somebody who says, well, what if? If you guys want a really good story in market history, I would look at a company called Piggly Wiggly. No joke. And this is a company that was like the original GameStop. Piggly Wiggly was a was a kind of a legendary company. It was a supermarket, and they tried to sort of manipulate their stock by making it go up. And it was a failure, as you can imagine. But it was something that was like, really historic, sort of market squeeze, if you will. And it failed, but it was ultimately kind of an interesting, you know, market sort of manipulation story. And there are many others. There's a great book by John Steele Gordon called "The History of Wall Street," more or less. Let me see if I get the exact title for you.
There's also the Volkswagen squeeze. And I
Volkswagen
also
squeeze.
think, Lady Trader, that this, what we see now, like when you see a stock price completely, separate from fundamentals, when you see it go up to $300, $400, like the ones that come in after, right, that didn't catch it, think it's going to happen again. And these diamond hand, these ones that will hold it all the way down to zero. You'll hear like zero to hero. Fundamentals don't matter. Like I'm with Martin. Like the market is eventually always going to correct into the fundamentals of a stock, but there's just a whole new, I mean, for the last 3 years, right? We've been hearing the same story over and over and over again, right? Like if it happened once, it can happen again, and they're going to hold until they see it happen again, whether it doesn't, and no matter what their losses are. I mean, there are people holding bankrupt companies
Yeah.
into cancellation and believe that it's coming back. So I mean,
So
illusion is everywhere.
the book is called The Great Game by John Steele Gordon. Wonderful history of Wall Street. And then there's another book called Business Adventures. This is a book that Warren Buffett and Bill Gates say they like quite a bit, and it talks about the Piggly Wiggly squeeze. So back in the 20s, there was an attempt to corner stocks, and this is partially what led to the creation of the SEC. And there were a number of people that tried to buy up the float of different companies and try to goose the stock and gun the stock to the point where they could force them to sort of go up and squeeze everyone. But there was a lot of these ended up in tears, because without an actual business at the end of the day, all of them were sort of doomed to collapse. But anyway, let's take some more questions. I'm sure some of you are really pissed off. I'd love to hear from you.
Hi, Martin.
Hello.
I wanted to come up and talk about the news today about GME and Keith Gill potentially getting kicked off of E-Trade for market manipulation. I just thought it was really interesting. Previously they gave him a gag order when Congress subpoenaed him and everything, and I just thought it was interesting that now he knew better than to say anything at all, and instead was just going to post memes, post images, image edits, and like visuals superimposed over movie
Right.
scenes, and like this is somehow now market manipulation. But it's just kind of interesting because it's not words, it's images now that are, or maybe also him posting his P&L and posting his open positions.
Well,
I
there's
just
nothing wrong with doing any of that. I think that the market manipulation laws that I wrote a little bit about earlier, they do prohibit taking advantage, causing and then taking advantage of a rapid stock price increase. So you can't really pump a stock and then sell it and then tell everyone, especially if you don't tell everyone, hey, I sold all the stock and sorry guys, you're the ones who bought it from me. That's basically manipulation, right? I mean, that's, I think, would be challenged if Keith is
like if he
smart.
had sold the top, basically, like if he
Oh
had just
man, yeah.
dumped all those options when it peaked, like the day,
And
the
maybe he
moment
did
that
today.
No, he
Maybe he
didn't. He didn't, because he
good.
knew that would be way too obvious. He
Yeah,
actually
that.
held on to him, which actually might be a problem for him because he overpaid the premium. So he paid
And
$5.67
look, maybe the
for the
trade works
pump.
out. Maybe it
I don't know that
doesn't.
it's going to. Not
But
now. It may have if he sold today on the pump, but what's
this
coming?
isn't the first time in history where a trader has made a big trade. There are a lot of people that have done this over the years. Some made it out okay. Some lost all their money. Some made a huge fortune and became an even bigger legend. But it's not that interesting at the end of the day. If you go to Wall Street, if you've ever worked on a trading desk like at UBS or JP Morgan or something like that, every day there's some customer that places a bet every second. And sometimes they place a big bet, and sometimes they place a small bet, and sometimes they make a fortune, sometimes they lose a fortune. I
right, but
remember
only a
when,
few times have like the rules been changed because of people placing bets. Right? I think in the case of Piggly Wiggly, didn't
well,
they have to
E-Trade,
change?
yeah, they did change the law for Piggly Wiggly. For E-Trade, they're a bank that's allowed to. So E-Trade kicked me out after I bought 75% of a stock and refused to lend the stock out for borrowing. So I know a little bit about this. The stock went from 1 to 40, and I made 60 million bucks in a day or two. But E-Trade closed my account, which I was very surprised about. But they also knew, interestingly, that I'd be arrested 2 weeks later, because they got paid a visit by the FBI. And the FBI was like, investigating. They wanted records and this and that. And if you're the CEO of E-Trade, you're sitting there saying, I don't want this guy's account. It's going to get frozen. I'm going to have to do all this shit. I just give him his account back, right? And I don't know what's happening with Keith. I'm not trying to insinuate anything, but I think that if you're E-Trade, same as me, right? So I had this exact experience with E-Trade. Um, you're sort of better off without this customer. What does one customer mean to you as E-Trade? Nothing. It's $8 to trade, right? Like it's not like they get anything. They get some margin from balances and things like that, but it really is not that meaningful to have this customer. And if they could do this quietly, they immediately would. It's a no brainer. But the problem with Keith is if they shut his account down, do thousands of people leave and go to Robinhood or something? Now apparently these guys don't like Robinhood either, so there's nowhere left to go. But the reality is the stock market's really regulated. It's really difficult to exist as sort of a rule breaker. The banks don't like rule breakers. The rule breakers end up costing them huge amounts of money in settlements and things like that. So GameStop feels to most people like an extraordinary situation where someone's almost like hacking the stock market, and that's great. Hack away. But for me, I'd rather not see people lose their shirt. Again, I tried this with AMC. Over 2 decades, I posted short theses on stocks where I warned people about stocks. Every time it's the same thing. Every time. Wah, wah, wah. You're wrong. You suck, Martin. This stock's going to the moon. You're an idiot. I'm brand new to investing, but you're the idiot. And I have $5,000. I know you're managing a lot more, but you're wrong. And then 6 weeks later, the people say, "Oh, it's your fault that the stock went down," or whatever it is. And
Yeah, I lost my shirt on the first go around, so I'm here a lot smarter the second time.
uh,
Well, and I think that didn't the SEC just make a thing ruling about brokerages and like it's risky for them. Like if it is found to be market manipulation, then someone can go, well, why did E-Trade allow him to do this? And then
yeah, and
then
I'm
the
not a big fan of
liability
this.
falls.
Yeah, I'm not a big fan of this stuff. I think traders should be able to do whatever the fuck they
Yeah,
want.
I do
You
too.
know,
But yeah,
but the reality is, if you're E-Trade and you're running E-Trade, you got to think about it. I'm not the CEO of E-Trade, but if I
no, you got to
was,
think about liability.
yeah, I'd be sitting there thinking, okay, I don't want my legal department involved in this for the next 3 years. Easier for this guy to move to Schwab, just kick him out. And, it's probably better for business. Now, if you stand on principle and you say, no, our traders and we're going to protect them and they should do whatever they want, well, that bank is going to take a little more risk and maybe they get the benefit from it. Maybe they won't, but E-Trade's made their decision. So,
Maybe this is the future avenue of the zombie stock that GameStop is, that they should just be an options market for all these squeeze pumpers. That would be, one way for them to make revenue one day.
but the thing is, like, this is all ZERP phenomenon. Like, this goes away in a depression or recession. Like, nobody gives a fuck about GameStop in that market. GameStop goes to 3, where it was
Yeah,
before the
very
pump.
real.
Yeah, remember?
Well, it was
Remember?
going to zero. It was on its way to zero,
Right?
right? That's why it was over 100% shorted. It was just like every other retail dead zombie that was just going
Yeah,
to hell.
you can't change those dynamics, right? No amount of short squeezing, no amount of willingness to lose and waste money. As my friend Andrew Tate and Dave Portnoy, who's not a friend, but I don't know him, but Andrew and Portnoy have said we're going to throw a couple million into this or whatever. And it's like, cool, but it's not a good investment. You can invest in a fund, a venture capital fund, a private equity fund, a hedge fund that could, I'm not saying it will, but could make you 20% a year for the next 10 years. I worked at a hedge fund like that. It was Jim Cramer's hedge fund. Made a lot of people very rich. You could buy a startup, stock in a startup that could go up 10x, or you could buy this company, which has no great prospects. So I don't know. To me,
But
it's
as long
a
as they can do shelf offerings or like at the market offerings, they basically are like zombies, right? Like they can't die as long
yeah.
as these shareholders are willing to subsidize these
Like I said,
losses.
in the ZERP world, the propensity to sell increases because you use these as a source of funds. Everyone's a diamond-handed ape until they need the money. When they need the money, it's over.
Martin, I just listened to someone who is living in their car because they refuse to sell GME. So I mean, I think like
Well, some
I mean,
people
in
do that.
theory, in theory, it works, but there are some people who are truly just
Yeah, no, there are, but that's the minority. And at some point, the people in your household, if you have any sympathy or empathy for them, if you're the income earner, you're going to look around and say, gee, should I sell the GameStop so Jimmy can get a new book bag to go to school? Or do I diamond hand this? And I think that, in good times, it's an easy decision. In bad times, which is usually when these bubbles pop, the stock market, the dot-com bubble, my first bubble, 99, it popped when economic activity went down. When economic activity is going up, there's no marginal seller. Everyone's winning. Once economic activity goes down, somebody says, sheesh, I got a lot of money in this Intel. I got a lot of money in this Microsoft. And yeah, I just got laid off. Maybe I should lower my exposure. And then the whole thing's a big domino effect. And before you know it, there's a huge crash. And ultimately, the stocks that are most overvalued drop the most. And, stuff like GameStop will be back to $2 or $3 where it came from. And I don't know what'll happen to Roaring Kitty, but this isn't a smart investment. And again, the only way out is if the management of GameStop can somehow make this amazing kind of turnaround. If you look at the cash flow for the last 3 years, on average, losing around 150 million a year, they need to find a business that will make hundreds of millions of dollars a year, and that will only make GameStop be fairly valued, let alone undervalued. So it's very hard to create new businesses that make hundreds of millions of dollars a year. Very hard. Even company like OpenAI or Anthropic, the best sort of startups of the last few years, it's 1 out of 1 million. And it's not like Ryan Cohen has this established track record of doing that. He tried to add an NFT business line. Even the biggest NFT makers don't have any revenue. So really abysmal stuff. Durag?
Wait, what? Durag?
Okay, you average crypto?
What's up? What's up, Marty? How you doing, man? I'm curious. Like, is this a bad quest for Keith right now, man? Like, I, the fact that he has the ability to push a stock like he does is like just so impressive. But you know, I think we were in a different time period. The last time we had the GME phenomenon, and like the couple of things we have to remember right now is like, number one, there's not as much liquidity in the market as there was in 2020. Like, you had hundreds of millions of people just sitting at home, like with checks being written to them by the government,
Sure.
right? And then like people had the free time to just like they didn't have anything better to do. So,
Well, the company was also pitching a turnaround, and the turnaround hasn't happened.
right. And it's just like, man, I love the story so much. Like, I hate to see him like I don't know that you can damage a story because it was so great, but like I want to I just
I mean,
kind of
look at Michael Burry. This is another guy that people over-index to. Basically one of thousands of hedge fund managers, and arguably very much in the middle of the pack of hedge fund managers, not in the far right, 3 sigma kind of returners. Like, he's like a 0 sigma returner. And because there's a film about him, people care about him. And the reality is the guy, is not any particularly more exceptional investor than any other hedge fund manager. And, there's just a lot of interest in something that's on TV or something your friend tells you about. And that drives, this, kind of overvaluing that, again, returns to norm when capital flows return to norm.
Yeah, and
yeah.
Burry, like, everyone wants to see him do his greatest hits again. They're like, "Oh, Burry's gonna go short."
Right.
But like when Michael Burry goes long on Toyota, like, that's not a cult phenomena,
Right.
or like when he just starts doing normal fund manager things. Now it's not interesting anymore, but only when he makes these gigantic loss leader positions.
Well, it's
Is
funny you
it?
say that, because there's often this temptation on Wall Street when you do make a big bet, like you're talking about, that you try to do it again. And Paulson was a good example of a guy that never, Paulson, one fellow I met, Phil Falcone, who had, these were two of the biggest subprime winners, and they never made $1 again. And I don't know if Roaring Kitty will make a great trade here. I don't know if he'll break even. I don't know if he'll lose everything. I have no clue. Why? Because markets are unpredictable. All I can tell you is probabilistically this is a bad investment. That doesn't mean it's for sure a bad investment. If I knew that for sure, I could make free money all the time. It doesn't work that way. I look at companies. I've looked at companies my whole life, and I've said, okay, well, how much would I pay if somebody came to me and said, Martin, I want to sell you the whole company, GameStop. I've done this many times for a living. I size it up. It's okay. Well, what would I buy this for? Well, outside of the cash, which how much a dollar of cash is worth, is exactly a dollar, and they have something like 2 billion of it, so it's worth at least that. And then for the rest of the business, this declining retail business, I don't know what would I pay. It's hard to say. I mean, it just loses money. Why would I pay anything? Maybe I'm feeling generous. I'll pay 1 billion, something like that. That's a really low stock price compared to where it's at, right? So how many shares outstanding does the company have? 305 million. So 3 billion is a $10 stock price. So a lot less than what it's trading at.
Yeah,
And
I think that's even overvalued, to tell you the truth. I mean,
yeah, probably.
just by book value.
Yeah, no, probably. So it's, why would I care if oh wait, I'm just trying to look at their cash position. Yeah, I see 1.2 billion there, and then I guess they probably raised, right? So their shares outstanding are more than they were before. So regardless, it's not pretty. Maybe it's less than $10, like you said. It's more like $8. But regardless, what's the upside? Somehow they get retail right. If that's the case, it's maybe it goes to 15 or 20, but that's nothing to get excited about. You're just praying for some miracle short squeeze, which is ridiculous because everyone that prays for that is going to get out when the price goes up. We saw this movie before. Stock price crashed.
There is a path here where he could have a similar outcome to last time. If he would pivot everybody's attention and say, hey, like they can halt the stock on the NYSE, like they can.
These are all nonsense games. Like at the end of the day, like people don't invest for these nonsense games. They invest because or at least you should invest because you want to buy a stock that doesn't require you to time it perfectly, doesn't require you to have your finger on the trigger the second it gets halted, and all this nonsense.
Well,
Like
they do here. He could just have them like he could just say, "I'm going to buy the GME coin," right, and like pump the shit out of that.
yeah, all this ends in
I don't think he
tears,
can even make a
unfortunately.
statement with words because he will probably get sued or even maybe arrested for it.
Oh, he
Like there's a
probably
reason
will.
why he can only make these statements with memes and images.
Either
Yeah.
way, I mean,
And that's hard to prove, right? That's hard to prove that he's making a definitive statement through this. But I mean, I think that the SEC and regulators are still kind of feeling their way through the effects of social media on the stock market. So I think there's more to come on that.
there are a lot of people out there who are much richer and much more talented, and they share their investment theories, and the stocks don't change. And
But it's interesting that the cult stocks are never the profitable ones. Like there's no cult stock around Novo Nordisk, or I mean,
right,
maybe the Nvidia
right.
is kind of a cult stock, but you got to be
No, I
pretty
know what you
rich to
mean.
be.
Yeah, no, I know exactly what you mean. I mean, Berkshire. These are just real businesses. When stocks are cult stocks because there's nothing else to them. You need the cult to be there. Anyway, let's get some more people in. Pulse, does anybody else have big? Did you want to say something?
Oh no, I'm going to step down. But thanks for having me up here.
No, thank you. Pulse or Brian, maybe? Trying to get through everyone. One of you guys needs
You
to.
can drop me if you need to, Martin, too.
No, that's fine. One of you
Whatever.
guys needs to start talking though. Brian or Pulse. All right.
Hey, Martin.
Hey.
How, I guess one question I have for you is you seem to be a bit of a contrarian, and some of my mentors, and I guess I kind of find that myself too. At times you can, like, I noticed that I just kind of call everything like, oh, that's just hype or gay or retarded, whatever. Sorry to speak crass,
No,
but
it's all right. Yeah.
how do you, like, at some point you got to start playing the game. I mean, not with GameStop, but just I guess with certain things. Like when do you decide, like, okay, I'm gonna, not call this inflated or, you know, pointless or whatever, and like actually, I don't know, just like take it seriously. I don't know if I phrased that well, but just to,
Yeah, I
to
mean,
abandon the contrarian mind.
I like contrarianism, right? And that's what this is. That's why a lot of people are here, because I'm telling the crowd that they're wrong, right? I'm being
Yeah,
the contrarian. Um, so
it just gets
you know,
lonely after a while. I feel like.
yeah, I mean, sometimes I'm with the crowd too, right? I
Yeah.
mean, it all depends. I mean, I think what's important is you stay true to yourself and your principles. And my principles are, when I buy something, I really want it to be a valuable company that's producing a lot of cash flow. Studied Warren Buffett my whole life. Um, I want to see the cash flow growing. I want to see a smart management team. I don't want to see, a shit show.
Yeah.
So GameStop's a shit show.
Right. It's just like, I guess the hype is so, real with it, and obviously real money's being made. I mean, I've
Yeah,
got
hype
no
goes,
dog in the fight. Bitcoin's kind of the
yeah,
same way.
yeah, hype is important. I think you have to think about it. But I also think that's why you size your investments accordingly. Like, I
Right.
think a lot of people from the retail world, there's one position size for them, which is all in.
Mm-hmm.
That's not how professionals invest. Professionals diversify. So if you were to short GameStop, for example, maybe you'll have 1% of your money in it. Now that's dangerous, of course. You might see a short squeeze. There has to be a price that you're willing to get out, perhaps, a stop loss. Maybe after the stop loss, you can think about getting back in. It's not easy. Nobody said it would be. um, the nice thing about shorting hype stocks is they have a lot to fall. The not so nice thing about shorting
Yeah.
hype stocks is that they have a lot of momentum. So, one of my
Right.
friends, one of the best traders I know, he loves to short hype stocks after they fall. Now, that actually would have not worked in this case to some extent. GameStop pumped up recently, went down a lot, and now it's going back up a lot. So,
Mm-hmm.
perhaps that's not the best strategy. Some people like to average up. That seems like a really scary strategy. Try to time the top perfectly or average into the top. That's obviously very risky. So, there's no easy way to win in the stock market on either side, long or short. The only thing that you have to figure out is what works for me over the long run. And for me, what seems to have worked is I buy good companies at good prices. And GameStop's not a good company and it's not a good price. And Nvidia, for example, is a great company, but I'm not so sure about the price. At that price, it's a little pricey. Great company, obviously, making great stuff. GameStop's not a good company, and no retailer is practically, and it's not a good price. Like I'll buy a bad company if the price is really, really good, like giving it away. I've done that many times, but I can't buy a bad company at a bad price. That's like the worst possible thing to do. And
Yeah, you get nothing.
well, even if you think that you can get the timing of some momentum right, that's what a trader's job is. But most of the people interested in GameStop are not interested in trading. They're kind of interested in following this cult into to the end, one way or the other. And that's
Mm-hmm.
really, I just suggest people, like, the only allegiance you have to anything is your profit and loss. Like, your job is to make your trading account as big as possible, lady.
Do you think there's like a community part of like this whole
Yeah,
meme stock thing, like where you invest, now you're
yeah.
part of the
And I
story?
appreciate it, Brian. I have to move on, but yeah, no, there is a major part of community to that. I think Amy knows that really well. Unfortunately, Amy's been beat up by some of these people over the top, way out of line, and for telling her opinion, which is unfair. I've seen it. Um, I'm a little bit of a braver person. No offense, Amy. Amy, you're very brave, but I'm somebody that really doesn't give a fuck, and is willing to go to the mat with anybody, anywhere, anytime. And nobody can cross the line with me. But irrespective, I think that there is a cult here, and getting companionship in buying a bad stock isn't the best way to get companionship. Get a dog. You can get a cat. I have a nice cat here named Nibbles. Whenever I'm lonely, I scratch her neck and she purrs. It's fantastic. that's a great way to get some companionship. I should probably try Tinder as well. But ultimately, you don't find it in gee, let's form a club to make this terrible investment. That doesn't
Well,
seem that great.
it's trauma bonding, right? Like
Yeah.
that's what they're all like, all bound together by this kind of traumatic thing that they've all gone through with buying the top of ridiculously priced stocks and losing all their money. So I mean, they all just sit together and
All right.
it makes them feel better about it.
Let's hear from Always Sad, since this is, I think, a GameStop fan. And lady, if you want to interject, go ahead.
I was just going to say, Martin, just had a comment about what you said about being a contrarian, right? When we look at the data, 95% of the traders actually fail. They lose money, right? So it actually does make sense to kind of take a step back and say, okay, if everybody's going in this direction, maybe I need to rethink my strategy, maybe look at the other way and see, what else is out there. I think that's a great reminder.
It's hard to do when you get blinded by greed. When your position's up a lot, you sit there and say, wow, I'm getting rich, this is great. The last thing that you want to do is sell because things are going so great. And the vice versa, when your position's getting destroyed, you're sitting there miserable and saying, oh man, I'm getting destroyed, that there's no way I can invest more in this thing. And sometimes that's the right thing to do. But anyway, there's no simple answer, but always I want to hear from you.
I appreciate you for the opportunity.
Sure.
I've done a lot of research, so if you'll allow me a minute or so, I think I can put a perspective on why the investors, not the traders, like this situation. Because there's different reasons to invest, right? We all have different risk tolerances, there are different strategies, there's different reasons to like different stocks. But when we look at what Burry, unfortunately, Long Beach Mortgage, apparently all of their offerings and all of their CDOs and mortgage-backed securities, they're all still alive. Washington Mutual was their ownership. Goldman Sachs bought them 2 days before '08. And unfortunately, Burry invested 5+ billion on the day of the market crash '08. So Goldman Sachs is still very, very on the hook for what Michael Burry showed in '08. Now, when we look at the original IPO positions for GameStop, unfortunately, we actually have in our predecessor, EB Games, Prudential Securities, which turned into Wachovia, which turned into Washington Mutual, which got bought, and the other underwriter was Salomon Smith Barney. On the side of GameStop, 2001, we had an offering called GSTP. The building blew up, and directly after that, we had an offering called GME. And nobody really understands that the difference in those two offerings is Salomon Smith Barney took 3 million shares for $18 and cashed those fuckers out. They also bought the other two underwriters for that, and then they merged into Citigroup.
Well, this is great Wall Street history, but maybe we can cut to the chase.
Exactly. Salomon was litigated for that IPO fraud. Citigroup was litigated for the IPO fraud.
What does this have to do with GameStop?
Because these are all the underwriters of GameStop, and what they are
like a million years ago. They have nothing to do with the company now.
The thing that Burry was looking at was never finished. Goldman Sachs is on the hook for it, and these are all the people
You sound
shorting.
like somebody that probably believes in conspiracy theories.
No, I have all the filings and facts to show you. So
well, these are all facts, but they're irrelevant
research,
facts.
and you would like to look at this cited and searched research, I have every source available to prove everything I just said to say
But what it doesn't have nothing to do with GameStop.
It's the epicenter of how they covered 2008. We are on the inverse of that swap. That 2008.
Okay, so let me maybe let's try to find some common ground.
I can show you.
Okay, be quiet for a second.
Instrument possible.
All right. Yeah, be quiet.
MDD.
Yeah. All right, listen. You sound crazy. Most people on Wall Street, right? We buy shares of companies. Maybe you're trolling me. I don't know. But when we buy shares of companies, we try to determine if their stock price will rise or fall based on the prospects of the company, not based on their underwriters from 20 years ago. I took my company public through a bank called Jefferies. Jefferies sold, I don't even remember at this point how many millions of shares to the public. I gave my friend Vivek Ramaswamy a big allocation of that. and the stock did great. And we never did business with Jefferies again. We did business with another bank called Barclays. These underwriters have absolutely nothing to do with anything. They get paid. Some people call them disparagingly. They say an investment banker is like a whorehouse. Uh, they get paid 7%, sometimes less, 3%. They move on. They place your shares. They find a bunch of hedge funds. They find you a bunch of mutual funds. You fly around the country. You do a road show. I still remember going to Boston to close our biggest investor, Putnam. They put in for the entire IPO. Jeffries was sitting there demanding that we raise the amount that we raised. Uh, we had demand for 300 million. We placed 40 million. They wanted me to raise it to 60 or 80 because they get 7% on however much you raise. So of course they want more. And I told Jeffries to piss off. That got Jeffries mad. They didn't want to do business with me again. I went to other banks and placed
No
converts and things
disrespect.
like that. So
'Cause
what
I
does
put
that have to do with anything?
I
I
put a
quiet
pin.
down. I didn't ask. I didn't say you could speak again.
I didn't.
Yeah, shut up. The
I didn't have permission. I put
yeah
something.
yeah, quiet down. Before I remove
No, bro.
your dumb
Remove,
ass.
bro. Because I'm
All
not asking your permission. I'm speaking.
right. Okay. Thanks for coming. So underwriters have nothing to do with companies. They barely understand the company. They're literally just there to sell to their CRM. Um, they don't do very much. So you sound like you're a nut job. Which I think is instructive. That maybe that represents the average GameStop investor, conspiracy theorist. I don't know. Who's next? Saul?
What's going on, Martin? How you doing, brother?
Was he as crazy as I thought he was, or am I missing something? Was
Well,
I impatient?
I think just maybe abstracted a little away a little too much. I mean, I like to let people see if they can land their plane. I mean, I like big round points, bro. Sometimes like
I
everything
mean, he
is
was talking about the
relative.
underwriter from 15 or 20 years ago. Like, what? How could they?
Yeah, I
Like,
mean, right now this is just basically I feel like mania at his best, right? Like, I mean, we see this in so many different markets, and
there's
people are looking for a hero,
there's
and
a meme. There's a meme stock called Mother that
oh,
the rapper Iggy Azalea put out, and
oh yeah,
the meme token is worth $100 million. So, yeah, there's a lot of loose money around in the world right now.
yeah. And I think people are really, working to be self advantageous for maybe once. I feel like it's a lot of people's first time they've ever tried to
Yeah.
like take a villain arc and be good for them to themselves, right?
Well,
Like
it's
it's
a
like
lot of
the
people's
fuck it moment
it's
for them. You
it's a
know?
lot of people's first time investing. I mean, I think,
Yeah.
and thanks for coming. I just maybe wanted to get Dilly or Kelsey. Kelsey, the famous fellow, is here. How are you?
Hey, quick question. I've only caught a little of the space, so sorry if I missed something. I think you're probably giving people what you would consider common sense advice. I've never, a lot of this seems to be closer to gambling. I look at sports betting. I look at the average person who goes to work. They make like just enough, but they'll never be like the people we celebrate in America, right? Like I have 100 million. I do whatever I want. I can pay people to do whatever I want. And the fastest way that most people calculate to getting there is literally to gamble, right? Like if you have all the time in the world, if you have a ton of cash, you can do strategic investments, right? Like you have money you don't need to spend immediately to pay rent or whatever. And you can do all of this stuff like invest for the long term, 2 years, etc. But I want to get your thoughts on the gambling aspect of all of this, right? So when you play the lottery, people know the odds are terrible, but they do it anyway because every billboard they pass, you can make $1 billion doing nothing other than stopping at a gas station and buying a ticket. And then you too can have $1 billion and live like the people we celebrate.